live now. Oh shoot.
There's nobody here, no?
I don't know.
Where's the camera?
We're there.
Why is it on our crotch?
It's just because we're using the camera down below.
Oh.
Oh yeah. You want shoes on? Wait, should we? Oh.
Do we need shoes?
I don't know. Yeah. All right. Here we go.
Yeah. Rose is trashing out for 10 minutes.
Yeah, you got it in like 1 second. Yeah, go sit down. What happens?
Huh?
Oh dang! Here we go, yo! Here we go.
Oh
wait, we should get the blue lights on too.
It's the blue lights. Shouldn't it be green for money and wealth and stuff?
For trust and stuff?
For
Nice.
trust?
Oh, okay. Here we go. All right, let's see how to use it. In unable to create a highlight. I'm gonna add list. Share. Oh, I need to share this over to. You don't have access to this feature. You don't have access to this feature. Manage. Pop out dashboard. What's this one? Mute. Share screen. Oh, you can share screen. Nice. Share. Oh, you can share this. I'm gonna copy this. And then I'm gonna paste it. Send it to my Instagram. Tony Hong. Nice. It doesn't show if anyone's in here, right? Or does it?
I think it would. I just think nobody's going.
Oh, that's no one's coming. I'm like 99.99% sure. The only person who could come would probably be mom. Like, yeah.
Dude, low key, dude, dad and mom are like YouTube monsters, bro.
Really?
Dad and mom are like YouTube monsters. Holy shit. Wow, you can see us.
Oh, you can see it? Are you on YouTube?
Yeah.
Oh, shit. Does it look pretty crispy? Let me see.
Yeah.
Pretty crispy, yo?
Hello.
Yo, LC, we made it. We made it on YouTube. We made it on YouTube.
Bro, if we set up 3 different computers, we just live stream this the whole
Oh,
time,
dude, that's
we
3
can
hours.
get 20 watch hours, bro.
Oh, let's go. All right, I'm gonna do this. All right, we're about to go live right now. The guest and the host is here. First there's Daisy, then Morgan. Guest of the honor, Gen Z. I can't even hold my phone, freaking boomer. All right, I'm gonna drop the link here if you want to go live and see us, ask questions. If not, peace. Yo, should we go hit this up on a couple of computers then? We should. Yeah, let's go do that. That's like the whole point. That's the whole point. Dude, when you have no clout, you gotta go make your own clout. Oh shit. All right, cool. Yeah, I don't think there's a ghost.
Post the. Did you tag me in posting it?
Oh yeah. Let me put the link here. Let me put the link. Where's the link?
Okay, let's just use. Oh, bro, I should have brought all my fucking iPads and shit too.
Yeah, we should. Okay.
Let me join on this.
Oh yeah, let's go.
Too.
Exactly. That's how we do it. Wait, where's the stupid link? Here it is.
YouTube.
Yeah. Man, when you don't have a single friend. Mopong.
My friend. Apparently 6 p.m. was too early for the West Coast.
Really?
Because everyone's still at work and shit.
Oh shit. Oh,
yeah,
that's
shocked,
true.
Bro. All right. How many viewers this got? 2 viewers, bro.
Wait, is that one is you?
No, both are me.
Oh, nice. All right, let's go
Charge all our devices up. I'm gonna charge the devices up. Oh yeah. Nice. And continue. I'm gonna get into a different YouTube one. YouTube? Alright, cool. Then we get started. Oh, it's a 6. Alright, let me just join from the other 2, mute these things and go. Then Morgan, the guest of the honor, Gen Z. I can't even. Morgan, guest of the honor, Gen Z. I can't even.
Guys, I Not for.
All right, I think we're pretty much good at this point. Here we go. Here we go. Cool, cool. Nice. Got a thumbs up. Solid.
Oh yeah, I can like it too.
Oh, nice. How? Let's see. Roomcast here. Video. With. Let's see. All right. Cool, cool. Oh yeah, tag you, right? Nice. All right, cool, cool. Okay, I'm gonna go hit the record button here and let's rock and roll.
Dang, dang.
Oh no. Uh-oh. There we go. Oh, okay. Here we go. Oh shoot. Hopefully it does the thing. Okay.
How many people we got watching?
All right.
Us two?
Welcome to the show. How many people we got on here? We got 4 people right now. 2 of those being you, 2 of those. Dude, if this works though, like that'd be 4
Dude,
hours.
you should
to
just
watch
stream. You should just. We should just like stream farm with like all of the what is it? Like we should take every single device we own and you should just stream your entire day 24/7.
Oh, do you think YouTube would catch on though? If there's no activity though. Yeah, hopefully they're not listening. Yeah. All right, if there's any viewers in the if there's any viewers that are not the last name Hong out there, if you could drop anything in the chat, that'd be great. And if you have any questions, please let us know. We're actually here to answer real questions. I'm going to what do you call it? Put in the chat over there too. So I'm just looking at my computer over there because
I can't see that far, so
Yeah. Oh,
I'm keeping this right in front of me.
Let's see here. If you do, let's see, ask any questions. Let's see, send, and then can you pin a comment? Let's see. Oh yeah, pin message. Nice. All right, message pinned. You firing those hearts off?
Yeah, of course. Nobody's in here except for us.
Why is there 5 devices now though? 5 people.
That means somebody is. If you're genuinely here, can you like drop something in the chat? Like
yeah, that'd be sick. Who is it, Paulina?
It's definitely not. You know, it's not Paulina.
Oh, okay. Okay.
Oh.
Yeah. All right. Well, all right. Down to business. This is why we're doing this live. Whoever's out there supporting us, #1 supporter, actually in all seriousness, do appreciate it. But welcome to the podcast. Here we're doing a podcast live stream. This is a opportunity for us to talk about Gen Z and taxes. So today I have the Gen Zer of all Gen Zers, LCH Morgan. Welcome to the show.
What could you explain what LCH means?
Oh, I don't know. We want to get canceled on that. If you're Cantonese, you might know. If you're Cantonese, let us know and ping us, direct DM us. We will tell you about that another time. But now you have graduated Berkeley and went through your fallout, crash out of the corporate W-2 life, and now are self-employed. You are now making money, but making money has its own problems. So today we're going to dive into all the issues of taxes, money, everything related to Gen Z. I got a whole bunch of questions. You might have some questions. How do you want to do this?
You have questions?
Yeah. See how Gen Z spends money? Yeah.
All right.
All right.
I have questions too.
All right. All right. Sounds good. You want to start questions? Or you want me to start questions?
You start the questions. Now I'm curious.
Oh, okay. So I guess like so first one would be, the first question is like, so there's obviously memes about like Gen Z and, you know, millennials, boomers, all that stuff. You know, I think some of it's friendly, some of it's like kind of come out of people's lives. But like Gen Z is not as clueless about money as everyone says, right? Or do you say of your Gen Z friends, it's actually true?
I mean, if you compare it to like most other generations, like I don't think we're as clueless about money because now we have the internet and we have access, right? But I would say like most Gen Z and Gen Alpha are fucking stupid. Like but those who like actually care about their money, like they know how to like research it. But I think now it depends. Like, you know how like you learn all this shit because like you go through life, and so 10 years later after making all these financial mistakes, then like what you learn all of these advice, right? So I think like now there's just like an expedited like expectation for Gen Z to like know all this financial shit. But damn, should I be sorry? Whatever.
Oh, that's fine. I just do whatever. I mean, I'm probably Descript AI is gonna bleep it out anyways.
Nobody's gonna be here anyway.
I mean, there's no one here. I mean, is there one more person here? I mean, there's one. I think there's one real person here. Go shout out to the real homie, like straight up. But anywho, okay. So Gen Z is like, so people are clowning on Gen Z, and they're not as clueless as people say. There's probably some. Right.
I would say, but now I think another core difference now is that with all this like internet spend you can do, so like Amazon, TikTok Shop, all of this stuff, like people are pretty bad with their money. Like, and also like I think Gen Z has this new like kind of like doomerism life to them where it's like, oh, like, well, we're gonna die anyway. We're gonna like the economy's gonna crash soon anyway, so I might as well just like spend all my money. I might as well just like do all this stuff. So like it doesn't matter.
Okay,
yeah,
that's true. Because back in my old G days, dude, I worked at the restaurant, start at like 8, end at 10. Best savings mechanism. Everything's closed. You can't spend money. You literally could not spend money.
Yeah.
But like this was like also I was like too old, like too non-tech smart to know how to shop online. Like because that their iPhones were rare because iPhones were still locked by AT&T back in the day. So like if people didn't know that AT&T had the monopoly on iPhones up until X year. Once it expired, then all other carriers. But AT&T didn't work in the boondocks where we lived. So that's why no one had iPhones back in the day. But afterwards, that's when Verizon, T-Mobile, was it Sprint back in the day? That's when they were able to like, actually get iPhones. But back in the day, AT&T had the grip on iPhones.
Wow.
Yeah, so there wasn't an app you could just do Amazon and buy on. Like, so back in the day, it was not as easy to online shop.
Wow.
Oh, yeah. Yeah.
That's crazy.
Olden day rule here. Also, back in the OG days, this is a tax nerd tip here, probably no one gives a crap. But Wayfair versus South Dakota, back in the day, you could buy stuff from the internet sales tax free. Back in the day.
Yeah. Really?
Everything was sales tax free back in the day.
Wow.
When you bought it off the internet. So like if you wanted to buy like this road mic, instead of paying like, 10% tax on it, pay $50, it'd be $50 cheaper.
Wait, also we have Dirte Haas has joined.
Yo, wait. Oh, nice. Oh, yo. It's Harry, yo.
Oh, it's Harry.
Harry, my man. Yo, he's supporting. Yo, we're getting the watch hours up here. Yo,
Harry, if you have a few devices, please feel free to join in on two more of them.
Oh yeah, if you want to join on the iPad,
all you got to do is keep them on silent, and then
join on the Mac Mini, but use a different login. Use the MacBook Pro, use a different login. Use the phone, use a different login. Yeah, turn up all those burner hats.
He said turn that lamp off.
Oh shoot! Oh man, yeah. Oh.
Dude, Harry the G, bro.
Yo, Harry saving the day right there.
Wait, so what was the lamp? Is it not? Oh, okay.
Oh yeah, it looks way better.
Yeah, it looks way better.
It looks way better here now.
Yeah.
Nice. Getting blessed. Okay, so diving into all right, let's get a little bit more serious.
Hey, yo, we have 7 people here.
Yo,
wait, no,
7.
Harry's extra. Okay, I'll chill out.
Hey, if you're a real human out there, you say hi in the chat. That'd be sick. Otherwise, Morgan and I are just gonna yap all night like a couple fools. But we will take all the support. First live stream, like actually super grateful for everyone here. Like I always say, takes one. Like literally, actually speak of this. We had a lunch and learn. We had one person show up 2 weeks ago. 2 weeks ago.
Oh, shit.
So 4 people said they would come. One person showed up. Shout out Billy Guan. Then today we had our lunch and learn. We got 9 people in.
Wow.
The room only fit 10. So
wow.
So we practically filled the whole room. So like today dude, if we get one person watching this,
That's true.
and we get 2 on the next show, I'm more than grateful.
Chat, if you are here, oh my god, somebody else is here.
Yo, what's up? I wonder who. Yeah, drop who it is.
Ingo Clan 5769.
I don't know who Ingo Clan 5769 is, but dude, shout out. You're the real ones here. Do ask any questions here. More than happy to answer all your questions. But yeah, just to for anyone that's tuning in, of the people who are tuning in. Gen Z taxes. So that was the whole purpose of this episode, because like we want to educate Gen Z and Gen Alpha on taxes before they get raked over by taxes when they don't need to be, because in the information era, like it's all out there, but taxes are still kind of gray. So as Gen Z, what are your biggest issues as a facing taxes now?
I think, well, you know, my brother's a CPA, but I think, I haven't even filed my taxes yet because I was like on TurboTax, and then they were charging like $70 extra for me to just deduct my HSA money from my income. Like, and I was,
$70?
yes, and or like I think it was $40 to $70.
Yeah.
And I was like, fuck that. I'm gonna use fucking ChatGPT to file, because this is just regular W-2 as well.
Oh, weird.
Yeah.
Oh, TurboTax, dang.
Yeah, TurboTax is like fucking robbing people. If they actually want to save thousands on taxes, you have to pay hundreds.
Oh, dang. Yeah, that's actually a scam. I didn't know that.
Yeah.
Oh, wow. Because it's not really free. Back in the day, they were free, but then I think they got sued or something.
Oh, really?
Yeah, because they used to be like, we're free. But then I think like after you do the federal return, they charge you like $10 for the state.
Well, they say we're free, and then amongst every single way they say, hey, do you want us to do this for you? It'll cost like $40 to like $80.
Wow.
Yeah.
Dang.
Yeah.
Okay. So TurboTax is not free.
No.
Yeah.
If you actually want to save money on taxes, TurboTax is not free.
Oh, yeah. Yeah. If you want to save money on taxes, dude, honestly, like you got to do it like before the year ends. Like after the year's over, there's not much. I literally was telling people at the lunch and learn today, but like after like December 31st, Cinderella turns into a pumpkin. There's really not much you can do anymore.
Wait, what do you what do you think are ways people like can easily be saving on taxes that nobody does?
Yeah, so especially for like Gen Z, as that's the topic here for tonight, is like seeing the brand deals out there, seeing like side hustle income, like non W2. So like actually, let's just get the easy stuff out of the way.
Let's talk about the 1099 life.
Oh, 1099 or W2?
Or the W. Sorry, what's the easy stuff?
The easy stuff. W2.
Okay.
So all the 9-to-5 workers out there, we salute you for going into the workforce. There's something with the last name Hong, and we can't work corporate. We make the best damn employees, but we're just a ticking time bomb.
We're just like the best talking employees, amazing vibes, maybe like boots to the ground, like I'll sell my soul, my life for you, and then fuck you, goodbye.
Done. Yeah, then we're done. So W2 people do all the easy stuff. So if you have a 401k, like put $24,500 away into that, just stash it all away. That's going to save you a ton of taxes. That's your traditional version. Now there's a Roth version. For the longest time, when I was younger, I was like, what the fuck does Roth mean? So Roth, all it simply means is that this money goes in post-tax. So you don't get to save money on it today, but you save money on it when you retire at 59 and a half. So that's the great thing. You grow tax-free. When you take it out, it's tax-free. That's Roth 401k. So do that. That's $24,500. Then do an HSA. Shoot. I think the HSA is $4,400 this year. I can't remember. It goes up.
It's $4,400 now?
I think it is.
Because before it was like $3,000.
Yeah, look it up. No, I might be wrong. But it was the HSA is free money. For those who don't know what an HSA stands for, it stands for Health Savings Account. And this is like the unicorn of tax accounts. Why is it the unicorn? It's triple tax advantage, which means unlike the traditional 401k or Roth 401k, where there's only double benefit, this one's triple benefit. Triple benefit means you get a deduction when it goes in, it grows tax-free, and when you take it out for medical, it's tax-free. So you put that money in, once again, it's free money. And then lastly is the FSA, the flexible spending arrangement. So this one, only use it for how much you're going to use. It's a use it or lose it account. You can roll over the last 2 months, but I would just say add up your glasses, add up your copays, put a few $100 towards that. Unlike, oh yeah, remember last time you were trying to spend your FSA, you're scrambling and you got
No, they gave me extra money. That's why.
Oh, okay. So FSA, that's another easy one for W2 people. Pre-tax benefits such as
is FSA a write-off too?
It reduces your taxable income if you use it.
Oh, okay.
Yep.
Yeah.
And then pre-tax parking. Back in the day when I worked at Uber, I took the pre-tax parking and I didn't actually use it. I just pocketed the pre-tax money. So pre-tax benefits, that's really good. So anything like that. And then besides that, there's not a ton you can do afterwards. There's the mega backdoor Roth IRA that you could do, but that's like a lot of money. And I'm not sure Gen Z is making that much money yet because you still got to have some money to live life. So those are all the easy low-hanging fruits that like W2 Gen Zers can actually do.
Wait, can we actually roll it back? Because I think a common issue that Gen Z doesn't understand is like what is income and the fact that it's taxed and why you want to be able to deduct things from your income. So can you like walk everybody through and like an example of how this works?
Oh yeah, for sure. So if let's just say you make $100,000 as a W2 worker, and at $100,000, you're gonna pay Social Security and Medicare taxes. Social Security 6.2, Medicare 1.45. So that's 7.65% of your income gone like that. So on $100,000, they're gonna take that out of your paycheck. You got $7,650 less. So we're down to $92,350. Now that's just money to you, but you're still paying full income tax on $100,000. So like, isn't that some shit? You're like, wait a second, Social Security and Medicare money took out, but my taxable income box 1 W2 is still 100,000. So this is why deductions matter, because say for example, you do the HSA, let's just say you do $4,000 there, and then let's say you go do $16,000 for the 401k. That's $20,000 stashed away pre-tax. So at the $100,000, subtract the 20, you're down to $80,000 of taxable income. So you just hid $20,000 from the government. So, and then if you're at say a 25% tax rate, 25% between federal and state times $20,000 of deferrals, that's $5,000 saved. And at $5,000 at the in your 20s, right? They say the rule is at 8, 16, 30, 16 times. So 5, 15 is that, so 16 times is the leverage amount. So every dollar in your 20s is worth $16 by the time you retire. So we take 5 times 16. I'm really making my life difficult today. It's what, 90? So 90, that's $90,000 that is for you in the future here. So if you just do this across your whole entire 20s, that's $1 million all tax free for you. That's sitting at the end of the finish line. So really, if you're smart and you're listening to this, you as like a young Gen Z person, you literally can just hyper charge right away because every dollar in your 20s worth 16x. Just do, if you say you need like, I don't know, say you want 10 million post-retirement, do the 4% rule, live off of, $400,000 every year. You can just start super early, stash your money up right away. Yes, do you have to live a little bit like less of a life? Maybe. I mean, I don't know, live with your parents for a few years, save on some money, eat some ramen, but the benefit is super long because it compounds so hard.
Oh my God, we have 12 people in here.
Oh, dang.
That's crazy. That's
dang.
crazy.
Hey, whoever the 12 are,
whoever the 12 are, if you're actually Gen Z, do that this is how the CPA dude has managed my finances. I spend no money, just the bare amount, and then almost everything is in a retirement account, so that it'll be 16 times by the time I am 60. Yeah. Gen Z in the house.
Yo, Gen Z, what's up?
There's the Professor Danny.
Oh, dang. Professor Danny's in the house? Oh, he's Gen Z for sure. Dude, Professor Danny is actually the man behind the scenes on why we're blowing up on IG right now.
Dude, Tony owes his life to you, bro. You're him.
Oh man. Dang, dude, this is what's up? There we go. If anyone's not Gen Z, if you're like millennial, I'm a millennial, right? Yeah, I think I'm millennial. Yeah. Oh, Sheila and I were going over this. Like, wait, millennials, boomers, and then I'm like, what's the
Gen
age
X?
Gen X. Oh, and there's Gen X. So whoever's in here, dude, seriously appreciate you guys being in here. So yeah, we're just chopping up on Gen Z taxes. So we just went over W2 of like how W2 easy low hanging fruit that you need to be doing. And then we can get into the complicated stuff now with all the 1099. And this is where it really opens
Well,
the
actually,
door.
let's walk it back. So first we went through like why we should be deducting income because you're paying less on taxes, like when you can actually deduct like from your income, right?
Oh yeah, like that
Yeah.
example, like, dude,
Yeah.
would you not want $5,000?
Yeah.
Like it's free.
I think another issue, like there's so many of these accounts, but Gen Z like doesn't understand like why you do it. Even I text you every time I have to choose a 401k and an IRA, and I literally don't know the difference. So let's walk through it. Like, what is like 401k versus Roth 401k? And like people say you should choose a 401k, but for you, you've always told me to choose a Roth 401k. So what's the difference between the two, and which one should people choose?
Oh yeah. So there's many flavors. I would say there's 401k and there's many flavors. So there's ice cream, but there's many flavors of ice cream.
Mm.
So in the 401k space, there's two flavors. You got traditional 401k, or it's called 401k. They don't put the traditional in it. That's flavor one. Flavor two is called Roth 401k. And the reason why I advised you to do a Roth 401k is that my personal belief is that the income tax rate you're at today is lower than what I think you're going to do when you're 59 and a half. So like right now, like you're not at the 50% tax bracket.
Mm.
But in my own personal belief, I think by the time you're 59 and a half, you'll be at the 50% bracket just because you're not going to settle and you want money. So why not put in money at a cheaper tax rate today and take it out later? So let's just use an example, break it down in numbers. We put $100 into it. Let's just say you're at the 20% tax bracket, right? You would only save 20 cents on the dollar. Now, let's just say that same $100, because we did Roth, we withdraw it when you're 60, you're at the 50% tax bracket. We saved 30 cents on the dollar. So we have a 30% swing by the time you retire. 30% not going to taxes makes your life be able to retire a lot faster because you don't have to account for taxes anymore. So that's why I say for young folks, always go the Roth. Generally speaking, I mean, always is not a great number. Oh, Daisy's here. What up, Daisy? All right, cool. Everyone here, this is my dog. Okay, cool. She's gone. All right. But that's why I say it's better to go lower when you're in a lower tax bracket. That's also why Roth IRAs are made for people with lower income because you're not rich yet. So that's 401ks. Any questions on 401ks before we talk about IRAs?
So in a 401k, you can only get this if you're working at a company?
You can get a 401k whether you work for a company or if you're self-employed, you can have your own 401k.
But you just would have to pay that through like a payroll system like Gusto or something?
You can use Gusto systems, or you can use a separate 401k program, and then you have to modify the withholdings and reporting in order to reflect it correctly. So like, for example, back in the day, like I didn't have payroll, but I had a solo 401k for my business when I was a one-person show. And then I had Vanguard, but I had to tell Vanguard how much I put in. And then I had to report that on my taxes separately. So you don't have to use a payroll provider, but it does make it seamless so the two don't have to communicate and talk back to each other.
So with a traditional 401k, okay, so a Roth you're getting taxed right now, and then a traditional you get taxed in the future.
Yep. So
is there any example of where people get like, besides like the millionaire example, like is there any cases where people get super fucked over when they withdraw, like when they're 59 and a half with their traditional 401k?
I wouldn't say completely screwed over. Like they got to take the money out. They do have to pay taxes. Don't get me wrong. But at that point of your life, like I hope you had a CPA. Like at that point, like, like, and the reason why I say I hope you had a CPA by that point of time, it's never too late. I met a guy this past month. Homie did his taxes. He's 61, didn't have a CPA. Now he's shopping. He had 7 million in taxable income this year. And then he had like, 20 million in his IRA. So, but like, it's never too late. But like when you have that much money, I'm like, yo, dude, like you should probably get a CPA. Like I think I made some video the other day. I was recording. I was like, dude, if you make $100,000 and you don't have a CPA, like you're probably shooting yourself in the foot.
At what age should you what age or income should you be getting a CPA where you're like, Because, most people like who make like 30, 40,000 a year, they'll just hit up like HR Block. People who have like their business makes maybe like 100K a year, they'll just hit up HR Block. Like, when are you like, okay, you need a CPA? Stop playing around. Like, you need a CPA.
It depends on which one, which is like the classic cop-out answer, but there's a few flavors. So like number one, if you're W-2 only and you have nothing going on in your life, like as in like you're not investing in real estate, you don't have stocks, you got a house, nothing. Like you literally just show up, work 9 to 5, go home, do nothing, and you rent a home, like, or just own your home basically, $350,000. So up until that point, not much I can do for you because usually you don't have enough savings and liquidity for me to do stuff. But now there's profile number two. Profile number two is that you can be W-2 9 to 5 worker. You can make $100,000, but if you have extreme savings, you have about $50,000 to $150,000 in liquidity. You are interested in real estate, then that's the time to get a CPA because then you can use the short-term rental loophole, offset all your taxes. Yeah. And then flavor number three, self-employed. Once you have like a side hustle, just because of invoices, receipts, and audits, I would say, dude, I mean, even you got a side hustle like 30 grand, you probably want to talk to a basic CPA just to make sure you have enough protection and foundation built up. Just because my own thesis is that more audits are going to happen now with AI. Yeah.
Dang.
Yeah. Because Palantir injected like millions, like hundreds of millions, I believe, into the IRS. So my personal belief is that audits are going to rise.
Wait, can you explain what happened with Palantir and audits?
Oh, essentially, they are giving the IRS money to build AI into their systems. So my own belief is that because now they have funding to have systems and processes to go search through taxpayer records, and then they'll be able to go find, hey, I just want to send a notice here, send a notice here, send a notice there to start the initial part. They're not going to be full-blown audits, but they're going to be like, hey, prove to me that you actually deducted this the correct way. So that's my own guess. I don't know. This is like a little small uptick when I see in my company. I talked to another CPA. She's down in Fremont. She said she's a tax attorney though. So like tax attorneys tend to get more of this work than I do. But she said she's been getting a lot too.
Oh, really?
Yeah.
Wow.
Yeah. Anything juicy in the comments?
8 Bullet Ballers 385 said, Morgan, I'm your biggest fan. You taught me how to talk to white people. Congrats on your wedding, Tony, the coolest tax guy.
Yo, whoever that person is, we appreciate you. Oh, there we go. There's the camera right there.
And then,
thank you so much.
Somebody, Competitive Scrims 3953 said, what is a backdoor Roth?
Oh, nice. Oh, nice. I like this question. This is like the technical stuff. This is the geeky stuff I like, but this person's got game. they know something. So a Roth IRA lets you put $7,500 into it this year. But what the IRS says is that once you're too rich being like, I think it's 140 grand. I mean, don't quote me. It goes up every year. I can't remember. So that's what AI is for. But when you're too rich, in air quotes, they say that you can only make $140,000 or whatever that number is, and you cannot put money into a Roth IRA anymore. So instead, what the rich people do is that they use a backdoor Roth IRA. Simply means a backdoor Roth IRA allows you to bypass that rule that says, hey, you make too much money. No more Roth IRAs for you. So you bypass that and you say, peace, IRS. What you do instead is you put this money in a traditional IRA first. Then you just, back in the day, you had to call the brokerages, but the internet's so up to date now. You just hit a button probably within 20 minutes and say, backdoor this money. So I'm going to move my money from a traditional IRA into a Roth IRA. And that's called the back door. So you're essentially saying, open up my door here, put my funds over here. And now this allows you to put money into a Roth IRA. The reason why you want to do this is because Roth IRAs, you don't get a tax deduction today. It grows tax-free. But when you take it out, it's tax-free. So the backdoor Roth IRA is how rich people can still put money into a Roth IRA legally.
By putting in more money?
By putting in the money into a traditional IRA first, then just hitting a button, say, hey, move my traditional IRA money into my Roth IRA.
Oh,
That's the backdoor.
Wow.
Yeah.
And is that endless or what are the caps on these?
$7,500.
Oh, I see.
Yeah. So no matter what, like if you got the order of operations, which is always important in taxes, just like what's that dear my dear aunt?
PEMDAS.
Yeah. How's it go again?
Shit. Parentheses, exponents, multiplication, division, PEMDAS, addition, subtraction.
Oh, she still got it. She still got it. Oh
It's
man.
so cooked.
Yeah, I remember they used to say like my dear Aunt Sally or something like that. But for taxes, is that if you have a 401k and there's a match, always get that first. Second, go get the Roth IRA money for all the Gen Zers. Like that's because when you have a match, that's free money. It's like, bro, it's free. Why not take it? Then afterwards, put it into the Roth IRA or backdoor Roth IRA. And then if you still got money, go back and max out the 401k. So that's 24.5K plus 7.5K. So that's $32,000 that you set up. 32 times 16. Oh God. Was that 320 plus 6 times 32, 90, 30, 64, 128. $400,000 plus. That's $400,000 plus that you
in 1 year.
So you put $32,000 away. It's going to turn into $400,000 from your 20 till the time you're 60.
Can you explain the tax advantages of IRA and 401k accounts? Because earlier this year, I was like looking at my 401ks and stuff, and I was like, oh, like I was trying to look for some 1099. They're going to slap me with the money I gained from investing it. But then I found out that you don't even have to pay money on your capital gains on those.
Oh yeah. So those two, like you said, the 401ks, IRAs, that key part that I said, they both grow tax free, whether it's traditional or Roth, whether it's IRA or 401k, they always grow tax free. Now, the big thing though, you said what's the differences between a 401k and IRA?
Is there a difference between them?
Oh yeah. So IRA has contribution limits of $7,500. It also has income limits. If you make too much, you can't do a Roth IRA. You have to do a backdoor Roth IRA.
Oh.
Yeah. And then 401ks, though, 401ks are always administered by employers. So let's just say you got a broke ass employer. They can't afford no 401k. And then they're like, sorry, bro, got no retirement funds for you here, right? AKA startups. Startups don't got 401ks, right? If they do, they don't match shit. So at that point, you can just go get yourself a traditional IRA or Roth IRA. So the IRA, it is not administered by your employer. You go get it yourself. You go die on your own sword. You go die on your own hill. So the IRAs are great that way. 401ks are always employer administered. Yeah. And then also, if you don't have a 401k, tell your employer, like, bro, there's a tax credit for it. Like, they're going to fund it. So like you get like a 50% tax credit when you start up a new 401k. So
really?
Like, yeah. So like
you get a 50% tax credit on your 401k?
Yeah, exactly.
When you're an employer?
When you're an employer.
That's crazy.
Yeah. So like if you're like an employer, bro, there's free money. If you're an employee and you don't have a 401k, be like, yo, dog, like, have you seen the 50% tax credit you can get for having a 401k?
That's crazy.
Yeah. There's all these incentives out there. No one knows about it. I mean, only nerds like me know.
I think also like, what's this pre-tax parking you were talking about?
Oh, pre-tax parking?
Yeah, like what are these company benefits under W-2 that like helped also deduct from your income?
Yeah, so back in the day when I worked at Uber, and like, no, I didn't drive Uber. Some people are like, yo, bro, damn, bro, is that tough? Like, you drove Uber? I'm like, oh no. Like, I mean, don't get me wrong, that shit was still tough. Lost a lot of hair. It's all gray and shit now. But what you could do is that at Uber corporate, because you have to commute to work, and then when you commute to work, how do you commute? BART or drive. And because you have to take the BART or you have to drive, when you drive, you have to park and you got to pay for parking. So they're pre-tax commuter benefits, which essentially means that you can get these benefits tax-free for commuting to work. So for example, if your employer gives you, it's probably up now. I think it was like $265 back in my day. So it might be up to $300. I don't know. Let's just say $200. If you want to go buy a BART pass or like a public transit pass, instead of using $200 of post-tax money, so $200 of post-tax money at a 25% rate, that's actually $250. So if you use pre-tax money of $200 to buy your commuter pass, your BART pass, your bus pass, or parking, you save $50 because it's pre-tax. So essentially, it's a benefit for you to commute to work with pre-tax dollars and save the incremental difference.
Mhm.
So that's always the big thing there. It's like, hey, $50, but hey, $50, that's groceries, that's free food. Like
Mhm.
once again, 50 times 16, I'm gonna sound like a broken record all night. $900, my friends. Do you not want $900 for free? Like, I don't know, shit, man, I'll take $900.
So if you're a W-2 worker, like beware of writing off your 401k, your Roth, or your 401k or Roth 401k, your HSA, FSA, IRA, Roth IRA, and any of the pre-tax money that they give you.
Yep, exactly. Take all the low-hanging fruits. Just take them all. Like it's there for you. If you don't know what they are, just DM me on Instagram. I literally will answer. Eventually, I'll get there. It takes me forever, but I will answer all those questions. Like this is just free money that you should not leave on the table. Like just go to the CPA dude Instagram, DM me there. I will just answer them all eventually when I get there. Yeah.
All right. Are there any other like W-2 things that people like W-2 workers should be aware of that they can like easily deduct from their taxes, or tax advice like a Gen Z W-2 worker should get?
For W-2 workers, that's mostly it from a tax side. We could probably do a whole financial episode, but like side note, dude, eat all the free food at your companies. Food is one of your biggest expenses, right?
You can also steal toilet paper from the bathrooms.
Okay. All right. Well, don't know how you learned that. I don't want to ask why. So all the free food, all the free company benefits, right? So if they got the gym, go use their gym. Like, bro, you're in your 20s. No one gives a shit. Save as much money. It's cool to save money. Like, I don't know why. When did it become cool to be like, oh man, let me spend all my money. Let me show you how big of a baller I'm. Like, bro, it's dope as fuck to be frugal. It's not cool to be cheap. Cheap is a whole other thing. Frugal is a whole completely different thing. Like, I find frugal things actually very entertaining. Like, it's like, oh snap, bro, you can save $5. Like $5, don't give like $5 is like, I don't know what's wrong with me, but like every dollar still counts. Like, yeah, do I spend more money? Do I have a lifestyle creep now? Yes. But like, do I love saving $5? Do I love getting free food? Hell yeah. Like that $1.50 Costco, man, hot dog plus soda, so good.
Dude, CVS, my friends, they're all on like the same frugality as I am. And like I saved like $4 at CVS. We jumped up and down. It was $4 on toilet paper.
Exactly.
Like find yourself friends who will jump up and down with you when you do that, instead of friends who will be like, are you okay, bro? Like, or like look down on you. Yeah.
It's dope to save money. Like I said, every dollar in your 20s, $16 when you're 60.
All right. We have so many 1099 people in the chat.
Oh, for real? Oh, yo.
Paulina's one of them.
I actually can't see anything over there. Morgan has the phone.
You look at
Oh, that's all good. You go ahead. Yeah.
All right. I have a computer in front of me too.
Oh, Paulina's in the chat. Yo, what's up, Paulina?
Paulina's in the chat.
If anyone didn't know, so I think it was actually pretty funny. The internet put 2 and 2 together that Paulina, her Instagram was what Men Made. And then Morgan were sisters because they both did a mom video. And like, wait, you guys have the same mom? And then someone else then on the internet put together Morgan and I are siblings. So like shockingly, like, yeah, the three of us are actually all siblings here in the Bay, ironically. But yeah, it's kind of cool to see the internet put it all together.
Yeah. Wow, we have 14 people in here.
Yo,
can you believe it?
I gotta clap that up. Yo, we gotta clap that up. That's what's up. Oh man, yo, we got the Rockstar. Dude, seriously though, thank you so much. Like first live stream, low key, I was like, Morgan, I gotta chill in here by ourselves. But dude, it seriously means the world to me that everyone's in here supporting as we're just answering all these questions. If you got questions, I'm gonna answer everything. So just drop them in the chat, all free advice. Normally, like people hit me up on the internet, like, hey, can I get a consult with you? I don't even talk to them. I just send them to my team, not because I don't want to, I just don't have time. And then some people are like, can I please talk to you? I will talk to them, but I send them $1,000 booking link. Like, bro, you want to talk? It's cool. It's $1,000 an hour, but I really like just that I have enough time because this is like more fun to give back at scale versus like just doing one person and, you know, serving that person. No, don't get me wrong. I love serving people, but you know, it's sad that when you get older, it's just a lot less time in the world. Nice. All right, let's rip it. Let's rip it.
All right. should we go with answering the questions or just like starting with the basics on 1099? You know, everyone these days, I was talking to my friend yesterday and she was just like, yeah, I'm trying to sell to people who want side hustles because like everybody these days is working at least like 2 jobs or working 1 job with like a side hustle. So I think like a lot of people are collecting this 1099 income, but either people are avoiding the IRS or like I think people are not aware of how this like 1099 income works.
Oh yeah, let's dive into that. Yeah, I think let's do a quick one on the intro. We'll answer a question. If there's not a question, then we'll answer that, and then we'll keep on diving into the 1099. But let's top in this one first. We got a lot of 1099 people in chat, so yeah, feel free, anyone 1099, drop it in the chat. We'll keep answering those. So the first thing for like, if you're working W-2, which is great, like I actually think like working for someone is great because you learn a lot. As much as like I preach entrepreneurship, like dude, I worked like 2.5 years at KPMG, a year at Novo, a year at Uber, or I think I had a 5-year corporate stint before I said peace out. I learned a lot, but I did always was going after the side hustle. I'm like, dude, I need more money. I need more money. I need more money. This one, we live in the Bay, is expensive here. But if you have 1099 income, do be aware that the IRS is a checks and balances system, which means that the person that issue you a 1099 has to also issue a copy of that 1099 to the IRS. So if I say, hey, Morgan, here's a 1099 for $20,000 for a brand deal, then they're also gonna be like, hey, IRS, I paid Morgan with this social security number or EIN number $20,000. Checks and balances. So if you don't report $20,000 and the IRS has that, it's out of balance. That's how they know. And that's when they're going to be like, hey, we see that you have a $20,000 1099 to import. Then you got penalties, interest, and the income tax due on it. So first thing is keeping track of all your income. And the big part is, man, hopefully they listen to this. Kick is an AI tool. Dude, bro, if they sponsor this, that'd be sick. But Kick, I actually met them at Jason's Stats event. I was actually IRL with them. Pretty cool guys, but it's an AI bookkeeping tool. It's free for the first like 200 transactions. There's very free, few bookkeeping tools now. So Kick, I think if you're under 200 transactions per year, it's free. So just go grab it. It's better than QuickBooks because it's free. And track all your income that way. So the big part is like, because you have to track all your income, but as a 1099, in the view of the IRS, they see you as a business. So like you could pick up, dude, I could go drive Uber right now, make $20. I'm a business in the eyes of the IRS. So then what's the great part about being a business? Write-offs. Write-offs is why business owners are winning in America, unlike W-2 income. So for example, let's just say you're a 1099 worker and you had to use your phone to record content because you got a brand deal. And then you also have to use your phone to also respond to all your brand messages and to post it out there. You can actually write off a portion of your phone against that income. The other thing too is that all the software, say you had to buy CapCut Pro to edit, then you can actually write off that software also. So the cool thing about 1099 income is that you have write-offs, unlike a W-2 where you don't get write-offs. And then you're only taxed on the rest of the profit. So if you're 1099 hustling, and let's just say that you have your home office that you work out, like this studio room right here, like I can write off part of my home now against my business or my 1099 income and reduce the taxes that I actually have to pay. So that's why I love entrepreneurship. It's actually how the tax code's set up. The tax code's only set up in 3 ways. I always say it's charity, business, real estate. And if you're not playing in one of those 3, you're completely losing. So 1099 folks, you're a business. Treat yourself as a full-on business.
We have a lot of questions about write-offs and stuff.
Oh dang!
Let's get into some of them.
All right,
just because we have a backlog.
Oh snaps! All right, let's get the town. What time is it? Yeah.
6:46.
Okay. Hopefully no one has to go soon, but we'd love to answer every single question until we have no more questions. So just drop them all here. We'll rapid fire all these here. Yeah, if you just want to read the question, we'll rock and roll.
There's one, why S Corp over LLC, but we'll get into that one later.
Okay.
So someone asked, wait, if I'm self-employed, can I buy my own BART pass? Is this write-offable?
If you're self-employed, you can deduct your own BART pass for the business meetings that you use. So say you have your BART pass and like, oh my gosh, this sounds like a stupid question, but is it flat rate per month or is it per use? The pass. I know you have to pay each use, but is the pass like flat rate per month?
I think so.
Okay.
It's the deals are kind of chopped, so it's really hard to get the deals.
Okay. But
yeah.
anyway, let's just say the pass is $100
Mhm.
and you can prorate it up to how much you use it for business. So let's just say that 80% of your rides are for business purposes, 20% of our personal purposes. Of that $100, you can write off $80 against your business income.
What if they were 100% for business purposes?
Oh, the full pass is a write-off then.
Okay. You just have to document the who, what, when, where, and why.
Yeah. Like why you're commuting.
Okay.
Yep. Great question.
Great
First
question.
one done.
Paulina, are you still in chat? That was from Paulina.
Oh, nice.
Paulina, drop a emoji in chat if you're still here.
Oh, nice.
There's 11 people here. Wow.
Yo, we got
thank
11,
you guys.
dude. Thank you. Oh, this is
shit.
great.
If you guys didn't hear before, like we are answering every single question you have. Like, so ask them. How do you avoid gift taxes for brand PRs? I heard they can finesse creators with that.
Ooh, oh man, dude. Actually, Harry is cooking up the gift tax video. So I actually made a YouTube long form one for this one. So let's dive into that one. Repeat that question one more time.
How do you avoid gift taxes for brand PRs? I heard they can finesse creators with that.
Yep. So there's two very different distinctions. A gift versus quid pro quo, I trade you something for something. So a true gift, what that means is that I give this to you with no expectation. So let's just say you're a creator and I'm going to gift you, say, this Funko Pop. And I give it to you and I have no expectation to get anything back from you. I don't expect a video. I don't expect anything back from you. Like, that's just yours to keep forever. True gift, $0 of taxable income because the intent was a gift. Now, how brands and like how this person's saying, oh, they might finesse you. Yes, they might finesse you. Let's just say instead, hey, Morgan, I'm going to give you this Funko Pop and I expect you to create a video for me. And let's say that Funko Pop was worth $80 and you created a video for me. And it was like, okay, now what I can do is like, oh, I'll treat that as $80 of taxable income to you, give you a 1099, and that's how you get fleeced or finessed or whatever you say. So you get this Funko Pop for $80, but then you have to report $80 taxable income because I give you a 1099. So that's kind of like how products are very difficult, especially in the creator economy. Like, we had a good chunk of creators that we're working with, and then sometimes they just get product. They don't get money. And product, like, how do you determine product? Usually it's just like fair market value rate. Or you see, because if they don't give you 1099, you're like, well, shoot, I don't know what to do. Report that if it was truly a trade for services. Yeah. So it depends on the nature. If it's a true gift, I'm like, yo, bro, do you want anything back for this? I'm like, nah, man, just keep it. I just like what you're doing. Support your mission. This is a gift. Yeah, but if they want something back, that's a taxable transaction. It's the same as bartering. So, like, for example, back in the day, I'm like, yo, I'm gonna give you this chicken for 2 ducks. And then what's the fair market value of chicken? I don't know, $5. But you gave me 2 ducks. We both have to report $5 on our taxable income.
Wow. So, with UGC now, they give people people are running these UGC programs where they pay them like fucking nothing, but they give them, they'll pay them like very little, and then they'll really just send them the product so they can go do a UGC video with it. And then, like, even doing that sort of labor, like, you run the risk of like, you got paid nothing. You got paid 1 body wash, like market value $9 to $19, like, and the people have to pay taxes on that.
Yeah, they have to pay taxes on that, especially if they include it as 1099. So watch out. So if I were like a UGC creator, I'd be like, hey, is the product you sending me, are you including that as my 1099 income? And then if so, be like, hey, man, I got to pay the taxes on it. You might want to negotiate a higher rate.
Wow.
Yeah, it's always about negotiation.
Wow.
Yeah.
Shoot, I was gonna ask whatever.
Oh
I was
yeah,
gonna ask another question, but that was really good.
that's a solid question. Thank you to whoever in the chat for asking that question.
If I have my own business, can I put my gym membership on the business?
Oh, wow, that one's tough. That one's tough. Yeah. Gym memberships, just because they're too personal in nature, you can't write them off. But if you're depending on your business, look into a health reimbursement program. So like you can have a health reimbursement program, and then that could potentially allow you to reimburse yourself, and then you can get the write-off, and then you can go buy your gym membership. So there's indirect ways to do it depending on company policy too. But if you have employees, you're gonna have to offer that health reimbursement program to everyone. So like, so let's just say like
Mm,
I don't provide health insurance for my company, but I have the reimbursements, then I have to reimburse everyone that same amount each month.
mm.
Yeah. Good
So
question.
funny.
Yeah.
That's Felina's question too.
Oh, nice. Uh-huh. Nice. Oh, you
Okay.
should read out the handles as you say the
Oh,
questions
okay,
too.
okay. Oh, I just copy and paste them into this notes app, so
nice,
the
nice.
backlog's
Oh,
being
sure.
tracked. In her side hustle, we rent out property, have someone who paid us a security deposit through Venmo. I got a 1099 from Venmo a year later and realized my client must have clicked that it was for merchant.
Oh, that one. One, good job on actually identifying and reconciling that. Either you're really good at numbers or you have a good CPA. And for that one, yeah, that one is incorrect for you, but it doesn't matter because unless that person reclaws it, which they won't, what you just like post do is that you just back it out on your expenses. So, for example, you picked up $1,600. Was it? Did they say 1,600 bucks?
Didn't
Okay.
say.
Let's just say you picked up $1,600 on that 1099. Then that would be your revenue. So that checks and balances that we talked about earlier. You checked and balance. The IRS won't like come knocking on your door. Then afterwards, report it as an expense and put the expense as like, like you just put it probably as a like an in and out. I would use that as an expense to write it off and do 0. So then if the IRS ever asked, then you would just say, hey, they said this was a security deposit. Here's the proof and receipt. So just have that covered. But at least that way you zero it out and you don't pay taxes on that.
Okay, let me give more context just in case this changes the answer.
Yeah.
They say the security deposit was 3,600. And then this is the full thing. In our side hustle, we rent out property, have someone who paid us a security deposit through Venmo. I got a 1099 from Venmo a year later and realized my client must have clicked that it was for a merchant or vendor. This was a security deposit for one of our rental properties. Can this be rectified with the IRS? It's not income. Okay, I think the answer still stays the same.
Oh yeah. No, that's really good context. Thanks for writing all that. Yeah. So on that one, since it's literally this one here, just write it down as security deposit, like a reversal. I probably use that as an expense. So you pick up 3,600, add that to your total rental income, subtract that out with that 3,600, so it comes down to 0.
Checks and balances.
There we go.
Wow.
Boom. We're learning.
All right. W9 employee side hustle. Okay. So W9 employee side hustles, real estate investing, self-managed long-term rentals. Can I get the reps designation online? Tells me no.
Oh wow, this person's a hustler. Got everything going on. I like it. So depends on your facts and circumstances, of course. But let me give you the 3 rules that you can self-evaluate. Number 1, you have to work at least 750 hours or more in the trades or businesses of real estate. So number 1, do you even work 750 hours or more? More likely than not, you sound like a hustler. I'm going to say yes. Number 2, though, based off everything else you're doing, this is probably where you'll fail in the eyes of the IRS. And that number 2 prong is over 50% of your time dedicated to the trades or business of real estate. So this is where the IRS will fail you. And if you have a full-time job, that's 2,080 hours. That means you would have to work 2,081 hours in real estate to qualify for it, which is possible. But my friend, that's 2 full-time jobs. So it might be very difficult. But if you're married and you have a spouse, and your spouse can be the stay-at-home real estate professional person, that could qualify. But you have to have 750 hours or more in trades and business real estate, over 50% of your time. And lastly, you have to have material participation.
All right. They added more context saying Jonathan Lee, by the way, Jonathan Lee 6549.
Yo, Jonathan, my man, how we doing?
Added more
Appreciate
context saying I have a full-time W-9 job. I was reading online that I cannot get the reps. What is the reps?
Oh, so reps, great question. So reps stands for real estate professional status, and it's the unicorn of the tax code if you can get it.
Really?
Oh, okay. Yeah, this is how the rich people don't pay shit in taxes.
Really?
Oh yeah, this is like, yeah. If you want to become uber rich, this is what you need to have rep status. That's why I said it's the unicorn. They're rare. They exist. Well, in the tax world, they exist.
Wait,
but yeah.
Why does it make like you just don't have to pay taxes when you get reps?
Yeah. So when you have rep status at the federal level, of course, California sucks. But what you can do is you can earn $2 million in your business. You can go buy $10 million of real estate. More likely than not, you can use all that real estate to offset the $2 million in income using depreciation. So like depreciation, I always joke, it's like the 9th world wonder of the world after compound interest, which is the 8th world wonder of the world. So it's like that's how the rich people don't have taxes. Why do all doctors, why do all their spouses stay at home manage real estate? Because they have all the real estate that offsets doctor money. Why do engineers all have the stay-at-home spouse? They manage real estate portfolio, offset all the taxes. It's like, why does one rich person do an active job, and why does the other rich spouse always as a real estate person? Because they don't pay taxes.
Wow.
Yeah. So for John, yeah, the tough thing is if you're full-time W-2, if you are working more than 2,080 hours or over 50% of the time, then you would qualify. But I mean, brother, I own a business, and like, let's see, what do I work? I used to work 12 sevens. What's that, 84?
Yeah.
12?
Yes.
So I guess I could qualify, but I was crazy. But yeah, it's hard to prove. You have to prove the IRS that you worked more than 50% of your time. So like, you have to do 8 hours at your day job, 8 hours and 1 minute at your side hustle. That's 16 hours, and you still got to sleep. You got to shower and all that. It's tough. It's tough.
Wow. Yeah. That's crazy.
Yeah. That's a great question though. That's a great question.
Just bought Jonathan also bought an over 6,000 pound vehicle. Assuming for some write-offs this year, I'll need to protect 1099 income coming in this year's side hustle.
Oh, nice. Yeah, Jonathan, brother. What's his side hustle? What's your side hustle, brother? Like, what's his Instagram?
Bro's cooking.
Dude, it's straight up. This guy's cooking. I love it. Reminds me of mini me.
Wow.
Here, I love it. I mean, he's probably way richer than I am. Who am I joking?
Yeah, he's got real estate.
Yeah, he's got real estate. Yo, check out the short-term rental loophole though, brother. So short-term rental loophole, that is where you buy an Airbnb and they kind of get the same benefits, real estate professional status. I actually just signed a new partnership deal with a company. And they're providing turnkey short-term rentals to our clients. I had to pay $5,000 to get the program, but I was like, I'll pay $5,000 to make our clients' lives easier. But yeah, if you bought that 6,000 pound SUV, make sure you document the mileage. After you document all the mileage, then you're good. And then you have to have the business portion, and you can write off and use accelerated depreciation section 179 with it. Yeah, I was actually telling a story about the lunch and learn today about, was it 2021? I was so busy doing everyone's taxes. I didn't even do any tax planning for myself. Did my books at the end of the year. I'm like, oh shit, I actually made some good money. And that's why I bought the Model X. So I bought that so I could write off the whole thing against my taxes.
Holy shit.
Yeah, when you're too busy serving people, you forget about yourself.
GG. The side hustle, Jonathan's side hustle is real estate, mostly long-term rentals, wholesale deals. I guess you'd call it marketing fees, flipper here and there.
Oh, nice. Yeah, wholesaling. Oh, I just did a super dope podcast. Flip with Zach is his Instagram handle. He owns X Leads. His buying power, he is ridiculously so good. I'm like, holy cow. Like, check him out if you're in that space. But yeah, if you're in the long-term rental space, wholesaling, flipping space, like, bro, add a short-term rental every year just for like, yes, make it make sense. Don't ever let the tax tail wag the dog, but like use that to reduce your taxable income. And then just buy one every year just to reduce your taxable income until you get, I'm not sure if you're married, dude, but until you get married, then maybe your spouse can do the real estate professional status.
Just so you know, he's also said they bought the X last month.
Hey, there we go. Game recognized game.
Tax credit on the cars.
I think it might have ran out.
Oh, yeah. Wait, tax credits are a crazy thing. Do you want to talk about tax credits for a second? Like, are they more common in like California or like?
They're federal tax credits. So like they're everywhere. So
really?
Yeah. So tax credits are very different compared to tax deductions. Tax credits is a 1-for-1 deduction or like the reduction in your taxes versus a tax deduction is a 1 to your tax rate. So like at the highest level in California, it's 50%. So it's a 1 to 2 versus a 1 to 1. So a tax credit is always stronger, right? It's 100% versus 50% at max. So tax credits, there used to be, oh man, dude, after the new tax laws, I mean, they wiped out the one for solar panels. They wiped out the one. Oh, it's gone. Yeah.
Dang.
Yeah, I wanted to get solar panels, but too late now.
Well, I heard they give out free. So like some companies are still giving out free solar panels because they just get money from the government to give out solar panels.
Oh, okay. I didn't know that.
Okay.
Yeah, but like, yeah, the solar one's gone. The one for tax for cars for EV, electrical vehicles, that one's gone. Like the new regime just wiped out everything. The disgust in your face. The disgust in your face. Yeah, so they wiped out all that. But the tax credits that are still good. So you got the child tax credit, $2,000 or is it $2,200 for every child that you have. If you have a new kid, Trump accounts, you get $1,000 for money there.
What are Trump accounts?
So Trump accounts is for any new kid born between was it last year and this year till 2028. The government will give you $1,000 into a savings account that can then get invested. So it's a watered down version of a traditional IRA. For other tax credits, there's home energy improvement. So if you're making some like energy improvements through doors, windows, what else, heating, cooling, there's some for that. But there's not as many good tax credits anymore. If you're a business owner and if you're in the AI space, the research and development tax credit, you can actually get that. So if you want to stand up AI solutions for your company, you can actually get the research and development tax credit.
Can you explain a little more into that? Is this for anybody or just AI companies or?
Generally speaking, a lot of software and manufacturing companies, but essentially like the research and development tax credit, we use a partner for it. I'm not super pro at it, but what essentially it means is that you are doing something to improve the processes of your company that is unknown and has the risk to fail. So let's just say that for me, I wanted to make an AI agent that prepared tax returns. Don't know if it could work, but if I hired an engineer, had all the software costs, the tokens, I can then get a tax credit for all those expenses that I used to make it. So it, generally speaking, a lot of software and manufacturing companies qualify. But in today's day and age with AI, because AI agents are unknown and uncertain, and if you hire a developer and you drop 200 grand to go figure this out, it's real money. You can actually grab a research and development tax credit for it.
Because that's literally the core job of most companies now is to hire a solutions engineer to go implement things for them.
Yeah.
So if you wanted somebody who was implementing AI into your business, would you get that as well?
Yeah. If we're spending money on it, then we
like. What if you paid some FDE at Salesforce, like a package of like $50,000 to go implement whatever? I'm just using a very high level example to go implement some AI into your business. Then you would get the $50,000 as a tax credit.
Yeah, as long
Holy
as
moly.
it wouldn't be the full $50,000. It's a percentage. But it's like the big thing is like as long as it's unknown, it's uncertain, because they'll try to disallow you uncertain. But like AI is uncertain. You don't know if it works.
How about for the people who are using AI, like a bunch of Claude Code credits to implement AI into their business?
As long as it's what the project is for and it's documented, then it would count.
Wow.
Yeah.
So you can write off your API keys and stuff like that.
Yeah, if people are spending actually real money on it and they're going beyond the standard Claude plans.
Really?
Yeah.
What? You can write off all your API keys? That's crazy.
Oh,
this gotta be a video. Harry, write this down.
There we go. That's good.
Solid. Cool. Michelle Mai, I don't know if you're still in the chat. You asked really good questions. She's real Gen Z. She said part one, for internship, how do you file taxes? Do you need to? And how does federal work study work for taxes? So one question at a time.
Yeah.
How do you so for your internship, you probably made somewhere between like $10,000 to $20,000. How do you file taxes? Do you need to?
Oh yeah, definitely. So like you would definitely just file taxes. If you work an internship, this is TurboTax sounds like they charge you, but like Free Tax USA, H&R Block, whatever free program there is. Oh, wait a second. Oh, dude, even this is free. If you made less than $80,000, it's called VITA. I think it's called Volunteer Income Tax Assistance. All colleges or all areas have this program. And essentially what it is it's accounting students or volunteers. So hence why it's called Volunteer Income Tax Assistance. They will file your taxes for you for free if you make under a certain amount. So find your local VITA actually and get your taxes done that way. Yeah, that's probably how I would do it. But yeah, do file your taxes just because you have it on. And then, Roth IRA is a great time. If you have some earned income, put as much money as you can into that Roth IRA before the year ends.
8 bullet ballers also said that they got $5,000 back from adjusted withholdings. So that's another reason to file your taxes.
There we go. Yep, exactly. Yeah, because they could have withheld money on your paycheck when you weren't even subject to withholdings. So that's free tax money back to you.
How does federal work study work for taxes?
Federal work study, I'm not a pro at it, but for how I would assume is that what you're getting for a work study is for you going to college, and then you shouldn't pick it up as income, hypothetically.
Really?
Yeah. Because it's like back in the day when I got.
But people make money from work studies as well. So some work studies pay towards the college, and then they'll give you extra income on top.
Oh, I think the extra income on top is taxable. Yeah, because back in the day when at the University of Minnesota, they got I got my grant, and then you can also get $10,000 worth of work study. I'm like, I don't want.
Actually, I heard work study money goes into your pocket first, and then you're supposed to use that towards tuition.
Oh, it's supposed to, yeah. As long as you don't if you get a W-2, then you have to report it. If you don't get a W-2, it's free.
There you go. And then I go to school and work in New York City, but I'm a Texas resident. How does that change my taxes?
Oh boy, you're in the worst state or the second worst state. It's always a coin flip between California and New York, the two worst tax states. But it's funnier in Texas because it's one of the best tax states. So if you physically work in a state, you pay taxes where you physically work and breathe their air. So if you work in New York, you're going to have to file a New York non-resident tax return. You're not a resident of there, but you still have to file a New York tax return. And then also if you're in New York City, you also have to file a New York City tax return.
Holy moly.
Yeah, it kind of sucks.
So where you earn income is where you need to file taxes.
Yeah, whoever's air that you're breathing, roads that you're walking on, grass that you're putting down, that's where you pay the taxes. That's where people always get confused.
Wow, this is sauce. This is sauce.
Straight up, dude. This chat is this is fire. I was not expecting this. I'm ecstatic
we were like,
right now.
5 people. They're all of our devices. One of them's Harry.
Yeah.
Who's Henry Vero? Is that your team?
No, it's not. Henry Vero's not from my
team. Bro's answering some he answers some questions.
Yo, Henry got game. What up, dog? Yeah, no, dude. If you're a CPA, we're tapped out on hiring right now. But I'm always looking for great labor, man. So great teammates, like killers. I'm always looking for killers. We're not hiring now, but we always will add people to our recruiting resume. So our recruiting pipeline. So if you got game, let's rock.
Are you hearing? I said it's Bill.
Oh, nice. Let's roll. Let's roll.
All right. What kind of? Okay. How does the IRS know? I want to answer this one, Loki.
Oh, let's. How does the IRS should answer some of these?
How does the IRS know if the traveling or specific actions were for business versus personal, like traveling on BART to SF to meet with another creator or coffee chat over a video idea versus going to a concert? The answer is that the IRS doesn't know. And this is why for every single thing you do, whether you're writing off your food or writing off your transportation, you need to record the who, what, when, where, and why. Because if you do get audited, then you can just say, I literally took this BART ride to go talk to this creator for a video idea over going to a concert. And then it's just foolproof, recording the who, what, when, and where. Who, what, when, where, and why.
Dang. Oh, man. The student is becoming the master. Next tax strategist of the CPA dude here. Yo, bro, if shit don't work out in life, we always got room for you.
I'd be a great salesperson.
You would smash a tax strategist. We have no female tax strategists yet. Yeah.
Really?
Yeah. We got one brewing. We'll put her out in the field soon, but yeah, she's an associate advisor right now.
Wow.
Yeah, I'm excited to see her in action. She's a killer. She's a killer. Young kid too.
Really?
I think she's like 25 or something.
Wow.
Yeah.
Crazy. Okay, let's go back to Okay, a lot of people are asking, so there's why S Corp over LLC? What kind of entity should I open to start protecting our income? How to maximize tax write-offs as a creator. So let's go back to the basics of like, I think one of the biggest things that blew my mind was S Corp versus LLC. A lot of people, when they start a business, they're just like, oh, okay, like I need to start an LLC. But like, can we talk about the legal versus like tax and then how this plays out like in taxes?
Oh yeah, for sure. So yeah, we'll start at the 101 here and we'll go up. So at the basic, as an LLC is a legal entity. So legal entities are generally LLCs or C corporations. So pick which entity that you want to be. An LLC actually protects you, right? Limited liability company. Limit your liability, literally in the definition. Now, corporations, a lot more fancy. I probably just skip it, just go LLC. So LLC, but however, if you live in California, you have to file an $800 fee every single year. So if you're outside of California, it's usually like a one-time fee. So grabbing an LLC is good because it's going to limit your liability, but you can't pierce your corporate veil. Now, once you have an LLC, though, you will not save a single dollar on taxes. All it does is limit your liability. So how do you actually save money on taxes? Is by having your LLC elected as an S corporation. So all it is like I say, it's lipstick on a pig. You literally tell the IRS, hey, IRS, tax me as an S corp. File the form 2553, elect it, and get on payroll. Now, once you're an S corporation, though, you save a ton in taxes. And generally speaking, people are asking like, what income limit makes sense? I generally say about $70,000 net income makes sense to be an S corp. So then now you're an S corp, you're going to save a ton in self-employment taxes because previously as an LLC or a sole proprietor, you were taxed on the whole thing with self-employment taxes. Now, when you're S corp, only what you pay yourself as a W-2 salary is subject to self-employment taxes. So if you make $100,000 as an LLC or sole prop, the whole $100,000 is subject to 15.3% self-employment taxes. So that's 15.3K. Now, if you have the same $100,000 as an S corp, $50,000 as a wage, $50,000 as a distribution, only the $50,000 as a wage is subject to self-employment tax. So that's only $7,650. So with this one tax election, one strategy, it's one of the best strategies for you entity structuring. You just save $7,650. So big part on S corp versus LLC. Generally speaking, in the TLDR, you make $70,000 net income, raise your hand to your CPA, and go become an S corp.
Wait, so why is it like when you make a certain amount of money, that is when you should go get an S corp?
The main part is because the cost of compliance. So for an S corporation, you now have to file 1120S, a business tax return. You have to have payrolls ran every month, or at least the payroll software. That costs money. Then you'll need bookkeeping software. You have to have an income statement, balance sheet, general ledger. That costs money. So you're going to have like $5,000 in compliance fees alone to be an S corporation. So sometimes you might be better off just staying lean as a Schedule C sole proprietor, single member LLC.
There you go.
We cooking in chat?
Oh no, nobody's talking in chat.
All right, so it's all us. It's back to us again, just like we predicted.
Oh, no, there's 12 people in chat.
Dang,
there's 12 people.
Let's rock and roll.
Tanvi, I don't know who Tanvi.
Oh, Tanvi's in? Oh, she's on the team. Yeah.
Oh, okay.
Oh, dang, it's late over there. What time is it right now?
7 p.m.
Oh, okay.
7 p.m. PST.
PST? Oh, damn. Oh, she hasn't slept yet then. Tommy probably hasn't even gotten the bed.
Dude, and she's our number one person on this.
Oh, Tommy's been killing it for us. Yeah, she's a go-getter. Dude, like, yeah, she loves work just like me. So we gotta like relate back off of that. No, she was actually watching your videos.
Really?
Like, oh yeah, she liked the energy, and she was talking about how there's not enough females talking about finances, and we're actually talking about, like, she was sharing with like, hey, like some people think that females are not smart with the money or the finances.
True.
But I think that's very stupid, because I personally think that females are actually smarter than males. So like, especially from an EQ standpoint, like my best managers in corporate were females. Like dudes, they just don't have as much EQ. Dudes are usually like, bro, can you suck it up and just work? Versus like females understand more. So yeah, she subscribed to your content, checked it out. She liked it.
Wow.
Yeah.
Dang, that's very motivating.
Dude, Tommy, what up? That's awesome. Yeah, that's awesome.
Okay, wait. Okay, my friend sent in a voice message. I'm just gonna play it.
Oh dang! Oh, put it up to the.
Oh no, I gotta mute our thing.
Nice. Oh, sick. This is fun though, actually.
Dude, this is very fun.
Yeah.
And the fact that your team is so clutch and everybody like joined.
Oh yeah, dude.
Oh, somebody asked, do you have any suggestions? Let me check out this question.
Oh yeah.
Oh,
that's epic. Your friend voice memoed something. Oh yeah, we hit that to the mic so we can chop that up for put it out there. That'd be sick.
Reducing taxes for my startup equity when it gets acquired. Any advice on that?
Oh, that one's money. Yo, so this one, how to reduce your taxes when you get acquired for your startup equity?
Ooh, let me ask it as a question. So for the edit.
Oh, nice.
How do you
got this?
Okay, how do you reduce your taxes for startup equity when it gets acquired?
So the biggest thing that you can do is going to be your qualified small business stock exemption. So if you have, it's called QSBS. If you qualify for the qualified small business stock exemption, which means you pretty much have had the stock for 5 years at least, you can exempt the first $15 million tax free. So like if you can qualify for the qualified small business stock exemption, do that. If not, what you can do is actually move that stock into an irrevocable trust. And then once it sells, all those gains are tax free. So you can use different trusts to do that also. So that's another way to like reduce that startup equity. Or that year, there's a super special strategy that we use. You have to make like at least 1.2 million for this special strategy to work. But there's a capital gain elimination strategy also. So those would be my top 3 answers for how to reduce the gains on startup equity. And then fingers crossed that you exit to the moon and off to the next one. It's always like these home runs. I always like want to see the people with the startup equity like go. Oh, I was talking to Fung the other day, and I was like, "Yo, your company needs to pop," but at the same time, your company needs to be aware that they exist.
True.
Yeah.
True.
She said she's trying to make some polls for you. So yeah,
she's working hard.
Oh yeah, she's the jam.
Okay, let me see if the
voice memo will work.
So I just started an LLC and I don't know if I'm supposed to open a business checking account for that. And also I got paid for a lot of like brand deals and stuff before I had an LLC. So do I transfer that into my LLC account or how do I get taxed on that? And then the other thing is, how do people like creators and freelancers and stuff keep up with all the different partnerships and things that they do when it comes to tax season, not only in the sense that they can like calculate how many taxes they have to pay, but also like, are you just gonna get those tax papers, like those W-2s for employed people and stuff? I forgot what the other one was for self-employed, like I-09 or something. Are you just gonna get that from every single company? Basically, yeah, if you're a creator and you were making income before and it's all in your personal checking account and you just opened an LLC for your business, what are the next steps? Is it creating a business checking account? And then what do you do with the creator money that you have in your personal account, XYZ?
Dang, yo, your friend's got game. Congrats on the.
She has 110K on Instagram.
Dang. Yeah, oh, she's a straight influencer.
Yeah.
Oh, wow. Dang, that's epic. So great questions. Once you have an LLC, you need to get a business bank account. The business bank account, you can I just like Chase. It's easy. American Express is easy. It's online. Bluevine's great. Those are 3 that you can go to. So your LLC needs a business bank account. It's a non-negotiable. Then also, now that you have an LLC, apply and get a business credit card. That's super important there too. So I always say run all expenses you can on a credit card and then it's paid off with a business bank account. Now, for how to keep track of all these different partnerships that you're doing, how to get the forms, I wouldn't rely on the 1099s of those companies myself or the W-2s they have to send to you. But for all the self-employed income that you're getting, what I would do instead is I would just track it all. At that point, I would grab, Kick, the bookkeeping tool, or QuickBooks, and mark these all down as vendors. So track your monthly income every single month, so you know how much money's coming in, how much money's coming out. Because there's a whole bunch of like personal finance related to this. Actually, that's probably the next episode we should do. Just because I think that'll be more super helpful than I mean, taxes will help, but taxes are downstream to basic budgeting. So have everything tracked on your end. That way, you know how much to report yourself and not rely on those people. And then the best part though is grab a transcript at the end of the season. So just file an extension next season and then reconcile the transcript against how much you reported to make sure that you got every single dollar and it's the checks and balances balance out. Did I miss any questions? Those. She has some really good stuff there. I think we got it all right. Ugh.
We can listen to it again.
Okay, we'll listen to it one more time. Can you play it 2x?
So I just started an LLC, and I don't know if I'm supposed to open a business checking account for that.
Okay, we answered
And
that.
also,
Keep on going.
got paid for a lot of like brand deals
question.
and stuff
Yeah,
before
pause.
I had an LLC.
So all the brand deals that you got paid for, keep that money in your personal account. You have to file a Schedule C separate for that. And then any money coming in afterwards, they can go into the business bank account, report it towards your LLC. The other thing that you have to do is update your W-9 to tell all your brand deals to send the 1099 to your LLC. Go ahead and play the rest and see if I missed anything else on there.
I transfer that into my LLC
Yeah,
account.
don't transfer it.
How do I get
Yep,
taxed
keep
on
it.
that?
Keep
And
on
then
going.
Wait,
the
don't
other thing
transfer it
is
into your
how-
LLC. Oh,
Yeah,
like,
because that's all personal money made in your own personal name first before the LLC was
well,
even
can't
made.
you backdate it?
You could, but it's not the cleanest way to do it. I was just thinking from a cleanest way, that's probably the easiest way to do it.
Well, if the 1099 hasn't been issued yet,
yeah.
then
Yeah.
can't you just ask them to reissue the 1099
If they do
over
that,
to
yeah.
your LLC?
Yeah. If they
Yeah.
actually know the brands.
Yeah, yeah.
Oh, yeah.
You
yeah.
should.
Oh, yeah. Oh, if they're chill with the reporting, that's okay.
Oh, okay.
Yeah. If it's like some random brand that they can't update it, or sometimes their accounting won't do it.
If
that's
they're
fine.
still gonna slap you with a 1099, you gotta ask I guess ask ahead of time.
Yeah. Always
Wait,
ask
so
them
what
first.
what if you like roll it back and then you say, hey, can you actually reissue this 1099 to this LLC? And what if they don't do it? Can you like report them or something, or like what?
If they don't do it, then you have to report that personal income on your personal side.
Really?
And then the rest on your LLC side. Yeah.
Oh,
Yeah.
I need to email a few brands.
Oh, there you go. There you
Oh
go.
shit.
Oh, it's okay. It's okay. Yeah. Well,
Whatever.
the big thing though, if you think about it for the IRS though, you're reporting all your income, you're paying taxes on it. It's more or less good. It's fine because all they care about is, are you reporting all your income?
Yeah, but don't you pay less if it doesn't fall as a personal?
You pay less in self-employment taxes if you have an S corporation.
Exactly.
Yeah. Yeah. So
you want it to go into your LLC?
Yeah, correct. Yep. You can report all that way. Just the paper trail is not the best. But if all the 1099s add up towards it, then you're good.
Oh.
So you want the 1099s, but like I'm talking about perfect world. So this is like moving forward. If it were happening in the past, how I would do it, have all 1099s get updated to the LLC, move that money into the bank account. Not the best, but it's the best way to clean it up to save some money.
Yeah.
Yeah.
Well, why isn't it the best?
Because it was originally deposited in your personal bank account.
Oh.
You want the trails to be super clean. But it's
really?
It's not the end of the world, because if say an auditor asked, like, hey, what's this? I'm like, oh, it's money I made when I was sole proprietor. I put it in, counting as revenue.
So this money's been hitting my personal account, and I've been putting it into my high yield savings account to go accrue some money on it.
Oh, I would always have it hit the business bank account just so it looks clean.
Okay.
And then take it back out if you want.
Okay.
I just like to have all the transactions.
Wait, so I can't just like have it in that high yield savings account and then put it into back into the business account?
You can put it back in the business account. It's just make sure you like how you do the bookkeeping matters.
Oh,
Yeah.
okay. So I've been tracking every single dollar that I make under my like name, which is when I just made my LLC, right? So, dang, this is some real tax, real life tax stuff going on.
There we go. Gen Z taxes right here. This is why we're doing this.
So then what is it? Okay. So I've recorded every single dollar that I've made. And like it has just been flowing through like some random ass bank account. And then it's been flowing through some random ass bank account. can I report it all as under my LLC though? Like at the end of the year?
You could, but it's not the cleanest thing to do. Yeah.
But if I just like kept really good like bookkeeping on this, is it chill?
I would like do that from the past, but moving forward today, not do that.
I've been trying to. Okay, so another problem that I've been running into is that my Amex account isn't international, but a lot of these brands do international work. So for example, one of them, I'm working with Korea, and I had to give them my Wells Fargo account because Wells Fargo can handle international wires, but Amex can't handle international wires.
Oh, you should get a second business bank account that handles international.
Oh.
Yeah.
So. But for me now, like I still just have to get the cash while like they're willing to give
the money. Yeah, always get the money. Go get the bag always. Yeah, but from a cleanliness side, from an audit side, it just makes a lot. Life is so much easier when you have a dedicated bank account and dedicated credit card for the business. So like you can also check out Bluevine. I'm not sure if they do international wires, but check out Bluevine also. If not, just get like a nice domestic one. Like I just use Chase. Like they're simple.
I think I've worked with like I'm on 2 international brands now. So
you should have like probably 2 business bank accounts then.
Okay.
And then a business credit card.
Do you know of do they make high yield savings for business bank accounts?
I was using one, but after that one story you told me, and also what happened with me on that online account one.
Well, that's not a real high yield savings account.
Yeah, I that one I'm not aware of, but I was actually, I was actually talking to these banker guys. They're dope as hell. Nick Chin and Val Huang. Shout out to you guys. Just giving shout outs everywhere. They're from Merrill Lynch. And then these guys kill capital gains. Like they got killer strategies, but they're associated with Bank of America. And then I was telling them like, dude, I usually have like a couple $100,000 in my operating account. It's earning like 0.01% interest. And then he was talking about they can help me set up a couple different business accounts to get money on that. And I just move the money back and forth as I need it. So I need to go talk to them. Or I guess we both could talk.
We should get them on the podcast.
Oh yeah. Yo, Nick, yo, Val, you guys want to set up our bank accounts for us?
Yeah.
Oh yeah.
Oh, nice. Okay, we should go back to the one voice message. I think that this is good stuff. That's good.
I can see
creators and freelancers and stuff keep up with all the different partnerships and things that they do when it comes to tax season, not only in the sense that they can like calculate how many taxes they have to pay, but also like, are you just gonna get those tax papers, like those W-2s for employed people and stuff? I forgot what the other one was for self-employed, like I-09 or something.
1099.
Are you just gonna get that from every single company?
Yes.
Some companies are too small, they don't issue 1099s. So do not rely on your vendors, do not rely on your brand deals to issue 1099s. Keep track of it yourself.
Wow.
Yeah. So that one, and the other question I heard in here that I didn't answer, that also a good message. Whoever your friend is, shout out. Is keeping track of how much tax you owe. This is one of the most difficult questions to answer, is because it's a moving target. So like for our company to do it, like we do a full projection for people, but it like, not everyone has the means to do that. As a super basic rule of thumb, it's not perfect, but at least put something away. Like I say, hey, every $100 you make, put 30 away into a rainy day fund for your taxes. So like, put 30%. If you want to be super risk adverse, put 50%, and then the rest, after you're done paying your taxes, just treat that as a bonus for yourself. Like
nice.
You put up 50%, that's fine. Actually, that'd be really good savings for you.
I also put all my tax money in the high yield savings. That is what I do, so I can get some more money. Other people, you can invest it.
Yeah. You can invest it. Yeah.
You can.
Yeah. I mean, dude, if you just do a daily dollar cost average of VOO, not financial advice, by the way. Like,
not financial advice.
Yeah, I don't know squat about finances. I know only stuff about taxes.
This is just CPA. A brother giving his sister financial advice.
Yeah, like you just go buy VOO every day.
How much? $10?
However much you're feeling. Like if you want to just put like, if you got, I don't know, let's say you got $50, how much is in the high yield savings right now?
6,000?
6,000. Yeah, I probably just drip it out $100 every day.
So I have this income tracker.
Oh, nice! Look at you go.
Yeah, and then I have like how much money I should have in taxes, where I set aside 30% for taxes.
Very good.
Yeah. Wait, what are quarterly taxes? Can you explain quarterly taxes?
Yeah, so that's good. First, it's like you have good documentation. So quarterly taxes, when you have 1099 income or you're self-employed or have a side hustle, anything where you're making money outside of your 9-to-5 W-2 job, you're technically supposed to pay quarterly taxes. What this is that the IRS system is a pay-as-you-go system, which means you earn money, you pay as you pay money in. So what you would do is that instead of paying the full enchilada in April, the full thing, then you would just pay each quarter. So say if this quarter you made $10,000, you just put $3,000 in towards your federal and state taxes. So you
have to pay that out to the IRS?
IRS in whatever state you live in.
Oh.
Yeah. So you should pay it in. So you should go in, but like I actually go pretty extreme. Actually, I was telling a couple of my friends this of like what to do on quarterly taxes, and you'll get hit with interest. Interest, I think, is like 7%. It changes every quarter. So 7% annualized interest, and then penalties. And penalties aren't going to kill you. But if you are able to leverage that money to make more money, then you arbitrage the difference. So like, for example, my buddy, he's making 40% annualized returns in the market. So I'm like, bro, even if you pay the 7% plus the penalties, you're still up 30%. So it's just kind of like a cost of doing business.
My bad. Keep going.
Oh, you're good. Oh no, that's just saying like you're just arbitraging the difference. So you're like more money is oxygen, money is king. So it's like the more money you have, the more options you have. But if you can't outpace the penalty and interest rate, just pay it in.
Okay.
Yeah.
So quarterly taxes are due September 15th?
Quarterly taxes are due September 15th.
Okay.
January 15th.
Dang.
April 15th and June 15th.
Okay, because I just made some money.
Nice,
so
nice.
I probably got to report this on the September 15th one.
Yeah. But you also can have deductions too. So, I always say pay safe harbor. Safe harbor is 110% of your prior year income. Just pay that and then just true up the bill next day.
Does this mean I have 15 days to figure out how to deduct like the lifestyle I've been living for the past 3 months from
it's probably
my
good
income?
To update your books. Yeah.
Okay. Yeah, that is true. I should start doing that.
Yeah, you should get kicked. You should get kicked. Yeah.
Okay, I will.
Yeah.
Let's just finish off this voice message. We've got some more questions in chat, so this is really exciting.
Oh dang! What up, chat?
You just opened an LLC.
Okay, wait.
For your business.
Okay.
What are the next?
We need to let it play so it can play again.
Creating a business checking account, and then what do you do?
Oh, okay. You answered this.
Money that you have in your personal account, XYZ.
Oh, what do you do with the creator money that you have in your personal account?
Those two options that we talked about. So the money, one more time. What do you do with the money in your creator account? Yeah, that's the question. Yeah.
Basically, yeah. If you're a creator and you were making income before and it's all in your personal checking account and you just opened an LLC for your business, what are the next steps? Is it creating a business checking account? And then what do you do with the creator money that you have in your personal account, XYZ?
Yeah. So it was, so you would get the business checking account. Sounds like you need an international version too. In this case, since these brands are international. So get a bank account that can accept international wires or transfers. And then with the money in your personal account, from there, like we said, like, hey, if you want to be perfect, you can just keep it on your Schedule C, and then report it that way. Or if you want to play games around, then 1099, get those all updated, transfer that money into your business bank account. And then you'll ask questions like, oh, do they get tracked with like I-09s or 1099s technically? You'll get a 1099 NEC form. And then those are usually due by January 31st. The companies have to send it to you. And then, but I don't like to die on someone else's sword. I like to control my own future. I just keep track of my income every month. That way it doesn't matter. I would still make an extension, reconcile against what the IRS transcript has against what I have.
Nice. Okay. Let's go to the questions in chat. Jonathan Lee is asking, for renovations, I paid our workers sometimes cash, sometimes it checks. Okay. For our renovations, I've paid our workers sometimes in cash, sometimes in checks. Can I write this off against the property to protect the income? There were no 1099s issued to them.
Oh yeah. So this one's always like very tricky. And with, obviously, tax positions changed. I feel like stuff I've seen in the past would not fly in today's market. So for those people that you paid cash or check, I would always grab an invoice and receipt from them. If you can't grab an invoice and receipt under audit, they are going to disallow that deduction. So that would probably be the best way for you to deduct those expenses is always to get the invoice and receipt from that person. And then as for 1099s, you should be grabbing obviously the world's not perfect and you're learning as you go, is that before anyone ever starts work for you, you always ask for a W-9 form that you're just talking about here, Morgan. So get the W-9 because the W-9, then you can issue them a 1099 by January 31st of the next year. So that's like what you can do moving forward. Say if this happened in the past, what to do. It's really going to be up to you and your risk tolerance if you want to write that off or not.
Oh,
Yeah, good question.
oh, these are so good.
Yeah, these are fire, dude. The chat, dude. Thank
Yeah,
you, man.
Jonathan
Oh my-
Lee. He said, "Hey guys, how can we support you guys? Heard someone mention merch. I'll support that heart emoji. You
Okay.
watching is enough, bro.
dude,
Like,
straight up, dude.
and asking these
that-
gas questions.
Yeah, I'm blessed. That invite a buddy next time.
Invite a
that's the
buddy.
biggest thing. Yeah, like we were actually going through like our programs for
Mhm.
the CPA due next year. And then like I think my next birthday gift ask from our clients, I'm like, dude, if you could just send a referral, that's all I could ever ask for.
Yeah,
Yeah.
I believe in win-win. So like,
Yeah.
it's just like you're winning with some tax advice, giving this out for free. Help your buddies. Both of you get more money. Go take a trip together. Go get rich together. That's
Amen.
win-win.
Yeah, don't pay the IRS. Like, dude, just take the dude. Literally, like, if you and like John, if you and like your buddy just go take a trip to say your long-term rental, wherever that is, write it off. Go fix up the yard. Go fix up the parts, and then have some fun. Shoot the breeze with the homie. That's a write-off right there. So
There you go.
as he's like, we can go back to Minnesota, go fix all these crap ass rentals that our dad has. But it's all good. I love. I
All
mean, like,
good.
as much as some of them suck, it was a great learning lesson in life.
I think you and I are very grateful for everything that's ever happened to us. But
Oh yeah, 100%.
yeah. Jaden Oka, he's my goat, bro. Dude,
for
this
real?
kid, he's cracked as fuck.
Yo, what's
He
up,
went
brother?
from like 0 to like 30K followers in like month or 2 months. Like
Dang.
like super go to Discord mod, like just like a community dude. Anyway, he said, question, what is the biggest mistake new creators question, what is the biggest mistake new creators / self-employed people make with taxes?
Yo, man, the goat himself. Appreciate it, bro. So the biggest mistake I would say, and it's just a whole new world, and because like our school system, education system is crap. They don't teach you this stuff. It's just getting your compliance down. Like you doing bookkeeping, having invoices, receipts, proper payroll, like doing the super boring stuff that no one likes. I know it's not sexy or anything. It's like cardio. No one loves doing cardio, but you have to do it. Is like just get your bookkeeping in order, your financials and accounting in order. Then afterwards is actually having the right tax strategy. So that's level 1. Level 2 is having the right tax strategy. What entity should you be? Should you be an LLC? Should you be an S Corp? Should you be a C Corp? And then from there, actually building in the strategies that support your goals. So that's kind of like level 3. So I would say those are the biggest mistakes I would see a new creator, anyone making some new income. That's a whole new world. W-2 is so easy. The employer does all the job for you. When you got side hustle income or you're fully self-employed, oh, dude, it's a two-sided sword. If you know what you're doing, you're slashing your taxes. If you don't know what you're doing, you're getting screwed over. You're kind of chopping off your head.
Can you walk us through like why you should get? Okay, can you walk us through why you should get a payroll system like Gusto when you elect an S Corp? Like, what are the benefits? Like, it's just like kind of hazy.
Oh yeah. So the reason why you should get like a payroll system like Gusto here, man, hopefully they're listening here too. Dang,
Okay.
that'd be blessed. That'd be blessed. JK, they don't know who the hell I am.
Send them the podcast.
I know.
Bro.
I'd be like, yo, bro, I featured you. But anywho, to answer the real question there, when you're an S corporation, you legally have to pay yourself a reasonable compensation. So the IRS is like, cool, bro, you could be an S corp. You don't have to pay self-employment taxes on distributions, but I need you to pay yourself a reasonable comp. Reasonable compensation is literally how much would you pay someone else to do the same job. So if I have a marketing manager, they cost, I don't know, say 70 grand a year. I can't go pay myself 20 grand a year. I have to pay myself 70 grand a year. So reasonable compensation is how much you would have to pay someone else. So the reason why I use a platform like Gusto is because they automatically file the federal returns every quarter, every annual basis. So they'll file your W-2s, your 941s, your 940s, your 944s, and then the respective state forms also. It just makes your life so much easier. Yes, can you do this by hand? Back in my early day when I was a cheap ass and I did not want to pay for payroll software, yes, I did it. Was it worth my time? Hell no. Like, I did not value my time at all. Obviously, I've learned my lesson now. I do value my time. But, oh my God, back then I was trying to save every single dollar. Like, the $61 you're paying every month for it, so much well worth it.
Abundance mindset. That's the biggest lesson I had to learn from you these past 3 months.
Amen.
And my life is so much easier. Yeah. And it's just like, let's just keep going. Like, the money's going to come, whatever.
You have to act like you have $10 million
that is how I act.
Taxes paid. Like, you have to act like that. If you don't act like that, you will not achieve $10 million.
Yeah.
Yeah.
That's the biggest lesson I learned. Like, holy it just makes, I think mentally, like, your life just gets so much easier. Like, you're not scared of anything anymore. You're like, let's go fucking eat the entire fucking world, bro. Like, let's go do it. Holy shit. 10 out of 10 recommend abundance mindset. For anybody who's listening, drop a question if you want to hear more about it. Tony Hong, the CPA dude, abundance mindset, you can have your cake and eat it. Biggest 2 things I adopted, my life just fucking turned out for the fucking better. Like, I just have no fucks given. Like, I'll just keep going. I'll just keep on making more money. Okay. Do you recommend opening a personal brokerage? Do you recommend opening a personal brokerage account as a new grad for personal dabbling, or just play it safe in IRA plus 401k ETF investing?
So I always explain that a taxable brokerage account versus an IRA versus a 401k, these are all cookie jars. They're all 3 cookie jars that hold all kinds of stocks, ETFs, whatnot. Now, 401ks, IRAs are tax advantage. So if you do not need that money before you're 59 and a half and you're super young, my friend, like, kiss that money goodbye, right? As in, you can't touch it. You can, don't get me wrong. You have to pay a 10% penalty. This is not worth it. So if you're okay and you're legit saving for your future, an IRA or a 401k is great, but do treat it as like an investment. Now, the other one, if you want a taxable brokerage account, oh, Daisy, always making a guest appearance. Now, if you want access to that money without paying a 10% penalty, a taxable brokerage account is great. So I would honestly sit down and zoom out. This is why I think a financial episode would make sense, is zoom out, see what your true financial goals are. If you want to fire and like retire early, so financially independent, retire early, then you may not want a 401k, a traditional version at least. You may want a Roth version because he'll take out the principal. So it really comes down to your goals. But, you know, if I were young again and, you know, speaking now, I would just say, hey, let me just put the money in the Roth IRA, you know, have some discipline and like not be like overly like spending too crazy. And then the rest of money go to a taxable brokerage account.
Also for everybody here, can you drop a like on every device that you're using to watch this? It might help. Oh, we got 13 likes. Let's
yo, we got the fire, yo. Oh man, we're blessed. Oh, Daisy showing appearance. Yeah, give a like for Daisy if you like golden retrievers.
Drop a like for Daisy.
Yeah, Daisy is the life of me actually. So dang, that's massive. Oh, sweet. Appreciate the likes. Just dude, straight up appreciate the support. Much love to everyone.
What are some pain in the butts you wish you were automated in your CPA dude business?
Pain in the butts, automated CPA dude business. I mean, there's there's a ton. I mean, automation wise, I mean, what? Why would I want to automate everything to be you know there? It just makes your life easier. But automations do lose a little bit of touch. I would say, yeah, I don't know. I mean, the work of like if the bookkeeping could be automated, the tax prep could be automated, tax planning could be automated, makes our life faster. Like anything that can save us time so we can have more time with the clients and actually build deep relationships and hop on the phone with them, I would take all that time savings for sure.
Okay. There are no more questions in chat.
We
I
did work.
have Claude generate a bunch of questions though.
Oh, this is solid.
Should-
I mean,
should we
chat,
look
it's
through
chat
it?
still, yeah, chat appreciate all the love. I love it. I love it. How long have you been live for?
I think we've been live for an hour and 46 minutes now.
Oh, snap.
It's
Oh, dang, yo, we going.
yeah, we got 13 people watching. I think everybody's got like 3 devices each. So
Nice, nice.
thank
Let's
you.
rock.
We will get our YouTube. What is our YouTube watch hours? It's like it's for the first 3 times 13, that's 39. That's 39. Let's go.
Because we're at 147 today.
147.
This would literally be a 25% spike.
Holy. How many hour YouTube watch hours do you need?
We need to hit 4,000 hours by
Oh,
December
that's
31st.
doable. Wait, can't you achieve that through YouTube Reels?
Shorts don't count.
Shorts don't count?
Shorts, you have to get, they don't go watch time. I think it's like 9 million views.
Oh.
I'm like, bro, 9 million views? That's impossible.
Because Instagram, like, they calculate watch time too.
Oh, yeah. YouTube is a whole nother ballpark.
Mm.
Yeah, it's a whole nother game. So thanks for everyone who tuning in on the YouTube here.
Dude, Tanvi, our GOAT, like, she never stops
beast,
commenting.
dude. Oh, man. We're super blessed to have her working with us. She's definitely going to be a killer leader for us for sure. Yeah, she's been just smashing it.
Chan, I'm so sorry if I pronounce this wrong. Chandan Saik.a.
Oh, Chandan's in? Chandan Sai?
Chandan Sai.
Oh, dude, Chandan's the man. He's my right hand side on all the tax advisor.
Oh, really?
Oh, yeah. This guy's he's like, yeah, anyone that's listening on here, he's the one running all the calculations. Yeah, he's the reason why I can actually yap. So it's I was actually showing this off today at our Lunch and Learn. We did a financial projection for one of our clients to be like, because he asked us how much money to put into solo 401k. And then I fired back. I'm like, well, I don't know, man. Like, how much money do you need for retire? So then we ran the calculations. We grabbed all his retirement accounts, asked him how much money did he need to retire. And we actually made that. But AKA Chandan made all that. I just reviewed it. So yeah, Chandan's the man. Nice. He's actually going to his little sister's graduation right now.
Really?
So, yeah, I told him like, yeah, just because like you had Chandan, this is like my little sister here that I was telling you about for the just be present, dude. Just it was fun, like watching you graduate, watch the walk across the aisle. I was like, oh dang, that's epic. So yeah, I was like little sis. That's crazy. So
your little child.
Yeah, it's crazy. It's surreal just to like be like, oh dang, there they are. 4 years done in college already. So wicked.
Oh, these are really good questions that Claude generated.
Uh-huh.
Do I even have to file if I only made a little money this year?
Depends on little. Like if you made W-2 income and you had 0 federal tax withholding and you're under the standard deduction, you don't need to. But if you had
what's under the standard deduction?
So under $16,100 this year.
Wow.
But if you made $600 of side hustle income, you have to file.
Really?
So it's different for W-2 versus self-employed income.
Wow.
Yeah. So like it depends on what little means.
Mm.
Yeah. But I would say there's really no issues with filing. Like I would always just file just to be compliant.
Mm.
Yeah. So the same thing for like the Roth IRA example. If you have earned income, because you need to file the form 8606 to make sure you're compliant and you're tracking all your Roth contributions.
Chanan said, it's been a pleasure to meet you both and really glad work with Tony.
Oh, nice. Oh, my man. I appreciate that, man. Love that. Yeah, no, it's definitely a huge pleasure, huge help for sure. Actually, there's this epic ass Porsche desk mat. He actually gifted that brought back from India.
Wow.
Yeah, when I
that's
visited
very
last
sweet.
February. Oh yeah, it was epic. Yeah, Chandan's the man.
What happens if I have multiple jobs or side gigs in 1 year?
Multiple jobs, multiple side gigs in a year. You just have a lot of compliance. So you have to make sure you add up everything. Make sure you have all the expenses though. That means you have more opportunities to get expenses. And then after you have more opportunities for expenses, then you just have to report it all. So it's just more compliance, I would say.
Do you recommend STRs and Airbnb arbitrage, subleasing rentals, or drawbacks in terms of potential property taxes?
Ooh, one more time on that one.
Do you recommend STRs and Airbnb arbitrage or drawbacks in terms of potential property taxes? in terms of potential property taxes?
Yeah, dropbacks I'm actually not familiar with. But like short-term rentals, property tax. So property taxes only apply to property that you own. Now, you may get passed off the property taxes if you're doing arbitrage, but like say if you own a short-term rental, you have to do property taxes. Now, if you arbitrage, generally you just pay rent and you don't have to pay property taxes.
What happens when that was the question. But what happens when people owe taxes? Like do you send me the one video last night of that one girl who was like, I owe $438. Like what went wrong? Because generally the US government wants you to overpay in taxes.
Yeah, so what went wrong was probably how that lady filled out her W-4 form and her employer didn't withhold enough taxes. Or the other part that they did was that they had side hustle income that has no reporting, no withholdings on it, and they didn't pay quarterly taxes.
Wow.
Yeah.
Wait, so if you don't pay quarterly taxes, not only do you owe interest, you also might owe tax penalties?
Yeah, you owe penalties and interest.
You owe penalties and holy shit. Okay.
Yeah.
Thank God it's only been 1 quarter of me making money.
Nice. It won't be that much either.
Harry is back in chat.
Oh, Harry's back. Yo, what's up, brother? Let's go. Round 3, 2.
What does my paycheck look? Sorry, I'm reading through these.
Nice.
What's a W-4 and why did HR make me fill one out on day one?
So a W-4 tells your employer how much you should be they should be withholding from your paycheck for your federal income taxes and your state income taxes. So if you want them to withhold more money, you tell them. If you want them to withhold less money, you tell them. So you dictate how much you should be withholding. Your employer then takes your W-4 form, puts it in their payroll software like Gusto, and then their software calculates how much they should be withholding on your paycheck.
Usually the number you put in is like 0 or 1, right?
That's the number that you put in is like how many dependents you got. So like generally, so it's like 0, like I have no kids. 1, I have 1 kid. 2, I have 2 kids. There's actually a way you can hack it where you can have barely any withholdings. You put like I have like 50 kids. Then they won't withhold on the first $100,000 of withholdings.
Oh, really?
It's ways to hack it. I don't recommend it though.
Like just pay the taxes.
Oh, for how people manage money and the psychology of money is so bad. I'm like, bro, yes, this sounds like a terrible answer, but because of your financial habits are also so terrible, bro, just over withhold and get the refund. Don't get me wrong though. A refund by definition is actually terrible because a refund is you getting your own money back without interest. But because of people's lack of financial education, because of how our system's set up, you can't break these bad habits. So you're better just having them over withhold on purpose so you can get a refund.
Wow. Yeah, that is. I told my friend, like, because she gets like a fatty tax refund every year. I'm just like, you're like overpaying in taxes, right? She was like, I don't care. I love looking forward to my extra 2, 3, 4, 5,000 every single year.
Yeah, that's a psychology thing.
But then everyone goes out and spends their tax refund.
Yeah, not a good idea. You should stash that away. Like, if you can change your financial habits, then you should always owe. It's always better to owe the government because then if you owe, then you have money. You can invest that money, make more money, and then pay the government. So that's where I'm like, like in the perfect world, if like let's just say we're AI, we're robots. Always owe and use safe harbor from last year. Either use like the 110% of prior year's income.
What does safe harbor mean?
So safe harbor means that this is a method of how you can pay in your taxes without incurring penalties and interest for estimated taxes, quarterly taxes. So essentially, you can pay 100% or 110% if you make too much money of last year's income or 90% of current year's taxable income. Wonky calculations. That's why people have us, essentially.
All right.
Yeah.
Not. I'm starting to get a little hungry.
Oh, same here. Okay. Yeah. Oh, yeah. Because we ordered pizza 2 hours ago.
Is it coming? Or we have to go pick it up?
It's been here, bro.
Oh, but you didn't eat it?
No, I didn't eat squat. Dude, I didn't even get to eat lunch. Bro, at my lunch and learn today, one guy forgot to order lunch. I was like, hey, bro, just take this. And then, I didn't even eat lunch. I only had a beef jerky stick so far. A coffee. Oh, and 1 slice of cheese. It's been pretty sad. But yeah, we got nothing else in chat. I mean, that's
Yeah.
we can call it a wrap here. And dude, this is mad blessings. Like this was fire. Like for the first live stream ever.
Dude, you should just live stream more. You should say for all the people who have ever asked you a fucking tax question in their life, but they don't want to like pay for like any of your services, you should just host these all as live streams and be like, hey, we can go talk about this on like my live stream right now.
That'd be good. Yeah.
You guys should eat pizza and stay here. What's the best? So you can improve your watch time. Lunch and learn for her. Yeah, Paulina's saying we should eat our pizza and just chat it up since we got 14 people watching. I don't know who the 14 people are.
Oh, I don't know. I mean, that's kind of just, I don't know if we aren't just people watching us eat though.
Huh? Yeah. No, eat, chat, talk.
Yeah. Uh-huh.
Unless you just don't want to. If that's the people pleaser response, we can just go eat.
Yeah. It's all good. Yeah, just because of just the chat versus us. Oh, because then we don't have to do post edit so hard.
Oh, you just
imagine that.
Well, you just cut out the
you
just cut because it takes us like 30 minutes to eat, right?
Yeah.
And then but we have like I'm pretty sure most of this is like people. Why do we have 15 people watching? If you're a new person, can you please like let us know you're here. Look into connect with you in the future. What's the best way for people to reach you? You can hit us up on at the CPA Dude Instagram DMs. It will get answered sometime. But Tony goes in and answers all of them. So yeah, it will get answered. Yeah.
Oh, nice.
Everyone's saying like, I think Pauline does have a point, but it's chill.
It's all
right.
But
there's a lot more questions too. Or no, actually just the Claude questions. But we should I think there's so many learnings from this first one that we could even record a better podcast. You know, good podcasts, the best podcasts are pre-written.
I would probably, knowing what I know now, I'm not surprised.
Yeah. So if we can like aggregate, like we can like better the flow of it. But honestly, I think the worth in podcasts are clipping. That's why like sometimes I would like read a question and then I would try to say it better because it's all in clipping. But even when you edit it, you can just edit the part out.
Clips will be fire.
Yeah.
Nice. Okay, cool. Well, thank you so much, everyone, for riding through. If there's no other questions, we'll sign off for the night. But thank you so much for hanging out. This has been fun, personally speaking. This is fun. Me in my flow state.
Dude, this is how we could hang out every week.
Oh, yeah.
It's just through this.
There we go. Until you move to New York and break Mom's heart.
Ooh. We'll see about that.
Okay, sounds good. Well, thank you, everyone. Appreciate it.
Okay.
Oh, somehow just put a thumbs up on my screen. Okay.
Oh no, it's the FaceTime camera or whatever.
Oh, nice.
All right. We'll see you. Thank you guys. Tony's crotch.